Hello, this is Miles Tullo bringing you the JD Power Financial Services Intelligence Update for June 2025. This month, I'm joined by Jennifer White to discuss how well banks are satisfying their customers' needs for financial advice. Her guidance comes from the JD Power 2025 U.S. Financial Health and Advice Satisfaction Study, which we released on May 28th. Welcome back, Jennifer.
Hi, Miles. Happy to be here.
Great to have you once again. Can you start with a quick overview of the state of the consumer?
Oh, well, goodness. This is a bit of good news, bad news situation, right? Today's consumer is financially struggling. There's no doubt about that. And, our data, we're now in our fifth year of this study measuring advice satisfaction and the financial health of the U.S. consumer. And, the financial health of the U.S. consumer is eroding. 2/3 of our population can be considered financially unhealthy today. That's sobering. But there's a bit of good news in that message, in that in the last 12 to 18 months, we haven't really seen any rapid declines in the state of that consumer's financial health. So for many consumers, now I'm sure those who are the most vulnerable are struggling to do things like pay their bills on time or have an emergency savings account using more credit. But for most customers, they're kind of treading water today. So maybe what could best describe the state of the U.S. consumer is not actually related to their health, but related to this bit of anticipatory worry that they're carrying around with them. Worry that in 3 months things will cost more. Worry that in 3 months a recession might become more than just a buzzword and become a reality, and not really knowing what that means for them. So, it's a fraught environment today, although it technically for many consumers is not actually getting worse yet.
Interesting. So there's a sense of concern, there's a sense of discomfort, but still consumers' financial shape hasn't changed really despite all the news that has existed. Do I have that right?
That is absolutely correct.
Got it. So what does that mean for banks then? How do they deal with their customers who are looking to them for advice and support and guidance in these moments?
We use words like unprecedented, perhaps a little too frequently in recent years. But this really is at least a once in a generation opportunity for banks, particularly to capture the hearts and minds of the younger consumer. Those that have perhaps divided attention, we need to recognize that their interest in receiving financial health and advice from their bank is increasing. In 2021, all consumers, 19%, 1 in 5, said, I'm very interested in having this value-added interaction with my bank. Today, that's up to 25%. So in 5 years, it's now 1 in 4. And if we go even further and start looking at that younger population, their desire for information is quite high. Younger customers' interest is 2 times the rate of the customers that are 65 and older. The appetite is there. The need to meet those needs is increasing then as well. And one last point I guess I would make is that it isn't just young customers or just financially vulnerable customers, that sweet spot that many banks desire, the young affluent customer or the emerging affluent customer. Their interest rates at their very interested rate is up at 38%. So that young customer wants help.
And what help do they want? What are they looking for?
So it's about short-term needs. On the list, of course, is always going to be a desire for things like investment advice or retirement advice. But what the majority of bank customers today of all ages, but particularly the younger, are looking for is an immediate direction on how to alter their financial course. What are they missing today? Help them eliminate FOMO. Help them reassure them that they're not doing something today that's going to damage them in the future. So that means things like, what do I need to, make sure I have him lined up today to improve my most immediate financial situation? How do I set aside money for an emergency? How much money should I really set aside for that? How do I stick to a budget? How do I monitor it? What tools? How do I know if I'm actually staying on track? And does that compare to a norm? And, if I want to set a goal, be it a Christmas fund account, a vacation account, or to set aside money because I know I'm going to need new tires in the future, how do I, earmark money without having to have a separate account to make that happen? How do I put all that together? Those are very short run needs, which when they're all met, position you pretty well to then think about investments and retirement. But they're definitely things that have an impact in 3, 6, 9, 18 months, as opposed to 10, 15, 20, 30 years.
And of course, those are all aspects of a customer of a bank's financial life that a bank is well positioned to have conversations with them about. And we're in the business of measuring satisfaction that consumers have with their banks. So let us have it. How are banks doing according to consumers?
I'm going to talk about it in 3 different ways. First is, are banks even getting customers' attention? So we, in our technical term, call that the recall of advice or guidance. And in 2021, recall on average was at 34%. We're now up to 46%. It's steadily increasing. So to that, I say, applause to our banks. Because they are doing a better job at capturing our divided attention as a consumer base. Then when we talk about who is satisfying customers best and what they're doing, well, Bank of America ranks highest in retail banking advice satisfaction for 2025, and we celebrate their success. Part of what puts them on top is they rank highest in things like the frequency of interactions and the relevancy of their message. So, getting that right message to the right person at the right time, personalization, and having clear calls to action. If I were to summarize Bank of America's performance up in one kind of statement, it would just be that they're simply doing more than other banks are. But there's other banks that are really delivering on satisfaction as well. In fact, there's 5 banks in total that are above the industry average. Bank of America's one. U.S. Bank is on that list. Citi, Chase, First Citizens, they all outperform our average. And we do see that U.S. Bank is a pretty notable gainer this year in terms of improving in customer satisfaction. And they're improving on frequency and then hitting that emotional connection. So are they, showing a concern for their customers' needs? So that's the second thing, satisfaction. And then the third is ultimately the altruistic. Are they helping customers change their behaviors? And we do see improvements year over year in the rate at which customers are taking action on the advice that's being given. So it's not just that they're getting attention and then it falls flat. We're seeing that, customers are really changing their behaviors as a result of this good work.
Well, these results are excellent. And I know Bank of America's been at this a while, right? This didn't happen overnight. And it takes time to build that muscle and to exercise that muscle and to leverage what you've built with your customers. So that's good to see the progress overall. How about those financial institutions that didn't score so well? What else could they be doing to support their customers at this time?
I think that one of the biggest things has to do with frequency and spread of message. So it's not just about volume, it's about volume and managing the calendar. So the data, the customers tell JD Power very clearly that in order to be delighted, it's not just enough to recall one value-added experience within a calendar year. You need 3 or more, and they should be spread across the calendar year. We can't just have this influx around tax season or, influx around a specific topic. It needs to be consistently delivered across an omni-channel presence. And we use phrases like omni-channel pretty often in this industry, but it really is about personal service interactions combined with digital engagements, whether that's the banner interruption at the top of the screen warning you about scams or the use of a personal financial management tool. And then it also includes an effective marketing strategy. Consumers want that passive reminder in their inbox that you're there to support them, even if they don't open up that email. It being there has an impact on their belief that you're there when they're ready to come to you for advice and guidance.
Well, it's always interesting hearing from you, Jennifer. You always have great advice about advice, as I like to think of it. So thank you very much for joining once again and sharing the latest findings. Really appreciate it.
Always fun to chat. Can't wait till the next one.
Likewise, Jennifer. Well, the JD Power 2025 U.S. Financial Health and Satisfaction or Advice Satisfaction Study is available now. You can learn more about it in the press release link that's below. I will be back in July to discuss the findings from our latest edition of the Financial Advisor Satisfaction Study with Mike Foy. So looking forward to seeing you all then. Thank you.